Hello everyone, welcome back to another video, and today we are going to be looking at what might be the best performing S&P 500 stocks as a UK investor. Today I am comparing 4 different ETFs, which you can see on the screen right now. So the 4 main ones we'll be looking at is Vanguard VUSA, HSBC, HSPX, Invesco, SPXP, and iShares iUSA. So as it says in the title, they are S&P 500 ETFs, so they are designed to track the exact S&P 500, so that would be their benchmark. So I was just looking at what might be the best S&P ETF to put into my next year's ISA, and I was quite surprised by the difference in results from each provider. So as you might already know, one of the most important things when it comes to picking a fund is the fees. So if we take a look at the fees now, they are very low. In fact, the S&P 500 tends to be probably the lowest fee when it comes to an ETF. Other low fees usually the FTSE 100 as well, but most other funds tend to be higher, more around the 1.2 or 1.3 range. So it's a really cost-effective fund, and as you well know, the S&P is is the best performing fund over a long period of time as well. So Vanguard has a fee of 0.07, HSBC is the most expensive at 0.09, Invesco is the cheapest at 0.05, and iShares at 0.07. So already you can see there's some disparities between the funds, as 3 of the funds have different prices and Vanguard iShares are the same at 0.07. So if they all gave the same returns, Invesco would be the no-brainer, because you'd get obviously the same returns, but the fees would be lower. And although these fees don't look like hardly any difference, and to be honest they're not, if you're investing over a time span of like 40 years for retirement, then these small differences are really amplified over those years and can actually cost you thousands of pounds. So I will show you an example of calculation later in this video. Okay, so next we're going to move on to the performance. So the documents I had access to, unfortunately Vanguard only goes back to 2013. The others went back 10 years, but obviously I wanted to get a fair comparison, so I only went back to 2013, so we've got 8 years of data from 2013 to 2020. So starting with 2013, Vanguard and HSBC had the same results at 31.9, and iShares had the worst at 31.5. So actually 0.4% is actually really big as a return difference. If it's just a 1 year anomaly, it wouldn't really matter much, but if they continue to underperform by that much, then actually that's a huge difference, and over 40 years could cost you a significant amount of money, and that's just from being invested in what you thought was the same fund. Invesco was second at 31.7. Okay, so 2014, Vanguard came out at top again, and iShares was at bottom again. 2015, Vanguard and Invesco shared the best returns at 1%, and iShares again was the worst. 2016, iShares again was the worst, with Vanguard and Invesco the best returns. 2017, once again, iShares was the worst, but all other 3, Invesco, HSB and Vanguard, posted returns of 21.4, just 0.1 better than iShares. 2018, the worst performer was Vanguard, so after Vanguard were the best performing for the 5 years previous, they were the worst on 2018, and Invesco was the best. So yeah, that was the first year iShares wasn't the worst. 2019. Okay, so best performing was Invesco, and not even by a small margin, 31.4%. That's 0.3% more than the second best performing, which was iShares, as you well know, had underperformed in quite a lot of the years previously. So Invesco is actually a really clear winner here against all the other 3. 2020, Invesco again came out at top, HSBC was joint top, and iShares and Vanguard, which I haven't highlighted the Vanguard one in red, sorry, but they were both the worst performing. So as I probably should have just mentioned previously, I've highlighted the green in the best performing in that year, and the ones highlighted in red were the worst performing. So if we just zoom out a little bit, so Vanguard had a 5-year run of best performing fund, but the 3 most recent years they haven't been the best performing. Invesco, the first 2 years was somewhere in the middle. They weren't the worst, they weren't the best, but for 6 years running they have then been the best. And if you remember earlier in this video, they were also the cheapest fund. So it looks like Invesco and Vanguard are probably the 2 best performers. But if we scroll down, what I've done for you as well is done the last 3, 5 and 8 year averages. And this will really tell us what fund is the best performing. So in the last 3 years, to my surprise, it was Vanguard in last place at 14.73%. Second was iShares at 14.80. HSBC was second, 14.87. And in a clear lead in the last 3 years, Invesco has come out on top with 15.07. Moving on to the last 5 year averages, Invesco topped that as well, and iShares came last. And then, the last 8 years, Invesco came out top again with iShares last. So this table here probably tells you who the winner is regarding the best S&P ETF out of these 4 for at least the last 8 years anyway, and that was Invesco. And although HSBC and Vanguard were extremely close at 15.41 and 15.42, but HSBC's fee was slightly higher than Vanguard's, so if you adjust it for fees, then Vanguard would have beaten HSBC by 0.01%, which is extremely small indeed. Invesco, however, not only were they the best performer and 0.08, or actually 0.08 ahead of HSBC, they had the cheapest fund as well at 0.05%. So that will make their margin of returns even better than the table you see in front of you right now on your screen. iShares was a clear loser here, so 0.25% behind Invesco, which I think is a huge difference. This is over an 8 year average as well. So if it was just over the 3 year average, then one year out that outlies that could have just been one poor performer for the fund could skew the results. But over 8 years to underperform by 0.25 of another competitor with higher fees as well, that is a huge difference. And what I'm going to show you next is the difference in funds, basically, if you have a 0.25% worse or better performing fund. So let's move on to the compound calculator, which is my favorite calculator, and I can show you the difference in percentage performance and how much it really matters and in what you pick. Okay, so we're on my favorite ever calculator, which is the compound interest calculator. I probably find myself on this most days, to be honest, as I like to play around with the numbers. So let's take some of the data that we got from the data that we had a look at just now. So let's just hypothetically say we started with a balance of £1,000. So we opened up an account, £1,000, and we are doing this test over 40 years. Let's say you're 25 and this is your retirement fund for when you're 65. Right, interest rate. So the 30-year average return on the S&P 500 has been 10.7%. So let's base it on 10.7%. But what we now need to do is look at the differences in results from those 4 ETFs that we have just looked at. So I'm just looking at my other screen right now. So the Invesco was the best performer at 15.50%, and iShares was the worst at 15.25. So what we're going to do is imagine that this 10.70% is the return we're going to get from the Invesco, and iShares will be 0.25 less. So I'm going to put in 10.70 for Invesco, and then after we're going to put in 10.45%, because that is the difference in return that we got from that fund, and that will show you the difference in the funds at the end of the 40 years, and you might be surprised. Okay, so 10.7% over 40 years. Just remember, this is the 30-year average of the S&P 500, which could be a lot of your guys' timeline regarding the investing horizon. So deposit amount, let's say £500 a month. Oh, let's say we invested £500 a month and drip fed over those years. Okay, so calculate. Right, so over 40 years, we would have £3,989,557. I'm just going to write that down for myself as well, so I can compare the next one. Okay, so let's say that was our, if we chose the Invesco S&P 500, that was our return. Let's compare that now to, let's say we chose the iShares, but we underperformed the Invesco by 0.25%. So let's take off 0.25%. Right, 10.45%. Same year, same starting balance, same deposit amount. Just remember, this is the S&P 500, so it's the same fund. It's just a different provider tracking and doing their own thing. So it's just a slightly different result, slightly different fees as well. In fact, we didn't factor in the fees as well. So iShares had a 0.02% higher fee. So let's actually reduce that slightly more to 10.43. So the difference actually is 0.27%. Okay, let's calculate now. Right, so after these 40 years, the return with the iShares example, £3,669,816.61. If you remember what we had just come up with the other example, that was 3.9 million. So just a rough calculation off the top of my head, the difference there is £320,000. £320,000. That's the difference in 0.27%. Can you believe that? So when you're thinking about what to invest in over a long period of time, and you're looking at the fees and thinking, it's only 0.2, it's only 0.3% fees, that makes a huge difference over a 30 to 40 year time frame. Absolutely huge. And when we're comparing the same fund, the S&P 500, this is all the same fund. It's all trying to track the same thing, but they're all giving off different results. They all had basically different fees and different results. Now, of course, unfortunately, we can't predict the fund's results over the next 10 years. It could be that Invesco performs worse. But based on our example that I showed you earlier, Invesco came out top in nearly all the years. They weren't the worst performing in any, and they had the lowest fees. So based on that, personally for me, I'm going to be choosing to use the Invesco ETF for the S&P 500 for my ISA next year, based on the research that I have just shown you guys. Because the difference over a 40-year period is just mind-boggling. £320,000. That's a huge amount of money for not doing anything except a little bit of research. It just took me 20-30 minutes to research. So just bear in mind, guys, that fees are really important when it comes to any investment. You could pay high fees for active management funds, or even just ETFs, index funds that are low fees. If they're tracking the same thing, then typically the lower fee option is always going to be the best option, because they're all trying to follow the same benchmark anyway. But also, the actual result of that fund and what the returns it gives you can differ as well, which I've just shown you. So it's worth looking. You can find all these documents. They all publish documents which show you their historical return. You might just have to crack out your calculator to calculate some of the rolling year averages, but the details are out there to be found. So please just do a bit of research. Learn how to look at these things, because like I've already said 3 or 4 times now, small percentages make a huge difference over time, and that is the power of compounding. So I hope you've learned something today, and I really do appreciate you watching this video. Please drop it a like if you liked it, and leave a comment below. Maybe there's another S&P 500 ETF that's worth looking at. Please let me know. Anyway, have a great day, guys, and I'll see you in the next one.